All right, good peoples. It is Bruce with Targeted Wealth Creation. Let me jump in here and do Roundhill versus Yieldmax. Fun for fun, same time in the market. So we start with the five. I color code these because of launch time. So obviously, NVIDIA didn't launch on 2/19, Tesla, etc. I know that, you should know that. But in order to compare, that happens to be the date for all the Roundhill funds. Since they're the new guy, you got to go to the new guy's start date so they have equal time, same underlying. It just comes down to who performs better. So I always say, go where your money's treated the best. Well, you decide where your money's treated the best. Loyalty means nothing, right? It's just, you know, nonsense. You may have a favorite YouTuber, that's a different thing. But, be careful because there's a lot of people out there that are being incentivized. It's just like I hate YouTubers and I'll probably ultimately pick one eventually. But right now I refuse to do it. Is getting sponsored by somebody. Oh yeah, get this cybersecurity tool, get this product. You know that, it's like watching television, although the anchor doesn't make the decision on what advertisement's running if you're on one of the normal TV channels. It's true if you're out there in internet land, right, in a private deal, then a person tries to choose something they believe in. But anyway, I don't like it, guys. I'll just tell you straight up. I'm here to help you, right? I don't make any money to speak of from YouTube. I don't care to make YouTube my income. Patreon, I'm doing very well in. We have a real audience. I'm helping people. I'm able to get to people and help a lot better. All right, let's jump into this. NVIDIA funds, same funds, 261 days in the market. Look at this. It's not close. This is extremely close. They both, can you tell the difference in that? Absolutely not. Well, you're gonna, and people say to me, "Oh, I don't want to buy a $46 stock. I want to buy a $15 stock." Well, you get the exact same distribution yield. So for every 3 shares of this one you buy, you can buy that one and you have the same thing. But guess what? You're going to look at your total return. You're going to dive down 37% in this 1535 value. Over here on your 3x, you're only going to go down 10%, 3x the price, guys. So don't give me that lame excuse. I hate it when people say the stock's too expensive. The only time that to me that rationale makes any sense is when you say, hey, I want to trade this $2 stock because I can buy more shares and it has options. So if I buy 1,000 shares, it's only $2,000. And if I want to write calls, sell puts, or do something, it might have a $2 strike, a $3 strike, or even a $5 stock, right? Versus a $50 stock. Then when you mix options in and you can own more shares, only if they're equal at that point in your belief about the company. Otherwise, it's nonsense. 10,000 invested is 10,000. If you get 80 shares of one fund and you get 300 shares of another, it's the same amount of money. Stop thinking that it's different because the stock is priced differently. It's not. All right. Tesla, much closer, right? After just killing it, 26.5% better total return in 261 days, right? That's 8.5 months, guys, going on 9 months of the year, and you're 26% better by being in NVDW. Why is that? You want to know why, in case somebody doesn't? Exact reason. Okay. They paid the same. Why is it beating it? Because it has leverage. When it has leverage, that means that NVIDIA is doing this. It's stair stepping up 1, 2, 3, 4, 5, 6 blocks and maybe only retracing 3, then moving back up. So it spends more time going up than it does going down. Therefore, it has higher highs and higher lows, and you're capturing more of that gain. Okay. You're losing more on the way down, but you're gaining more on the up. So I ask you, when you buy a high yield fund, whether you need yield, income, or you need growth. What do you want to pick? I'm going to ask you a question. Do you pick a stock that's going up or going down that you think, right? Doesn't mean we're correct, but hopefully you've at least thought that it's going up. It has to go up in growth. You have no other way to win. Well, some of you mistakenly believe you can yield your way to money. But I can play that game with you. Give me $1,000 and once a week, I'll give you $50 back until your money's run out. Okay. I'm just giving you back your capital. You're not making. Now, the reality is these aren't exactly that. They're extending longer than the capital, but they're declining like crazy. It's the same concept, guys. Don't be fooled by that. All right. So big winner here. And again, you want to pick winners. That's why I talk to you guys all the time about what some of my thoughts are, what the technicals tell me, what I see in capital sector rotation. I don't know it all, guys, but I do have 45 years in the market. I've been beat up, kicked, outsmarted, a lot of things, but I've also succeeded, especially in the last 15 years, because I've dialed it in better. I get tired of losing, right? Now I have the time to win more when I'm working and income is my first priority and performing within a company, which is a lot of money, then you want to do that. So I'm actually, by doing this Patreon, I'm making, 6, 7 times what I'm making in YouTube, if not more. So now my time is more efficient, but still it's taking away some of my investment time. But you know what the truth is? I feel good. I'm helping somebody who doesn't have my experience. Maybe they got 10, 15 years. Maybe they're trying to learn options. I'm teaching options courses. I'm teaching strategy. I talk about capital rotation. I've got a lot of people now on Patreon that are all in on the commodity super cycle. So we're having fun over there. We talk about it. Every time it retraces, I put information out. Here's what I think, right? It eases that frustration. You can't run up 102%, 120% in a stock and be really stretched from the 200-day moving average and not expect some kind of a retrace. The higher and straighter you go up, the more likely the pullback. Sometimes the pullback can equal the run up. So, but you need to know if that is a commodity super cycle. You need to know if I told all of you guys there weren't in NVIDIAs and NVWs and all that, but if we were back buying NVIDIA 6 years ago, think of the wealth we would have generated, even in growth. And let's say there were these high yield funds, then by all means, to have a fund that you can play for 6 or 7 years, I personally am not so sure on NVIDIA going forward. I just, it's 5 trillion. Is the next target 4 or 6? My bet would be 4. Now, that doesn't mean it's a horrible stock and it doesn't have some ability to gain, but common sense, nobody even got to 4 trillion. It got there first, then it got to 5. So my bet is that stuff is going down now. It's under pressure. Okay. The market feels toppy to me. How high can this crazy market go? Who knows? But if it keeps going a lot higher, it's a blow off top and it's gonna crash 30 or 40%. And I don't want that to happen to people. All right, Tesla, 15% to 13, much narrower. And Tesla is a volatile stock, guys. If you saw my other video, it's at least getting positive. It's making more money than it's getting more in distributions and it's losing in NAV. And that's only been the last 3 or 4 months of this 261 days, which is 8.5 months, right? So it's starting to right its ship. So look at this. Yieldmax outpaying 2%. Over here, projected out to 365 days, it gets to 3%. But look who wins. They still win because they're not going down as much, because Tesla's moving up more often, just enough to have Roundhill win this with its leverage. Look at Apple, another close one, yielding exactly the same, 20.18 to 20.12. Much cheaper stock over here. But again, does that matter? It shouldn't matter at all. Absolutely shouldn't matter. You're treated better over here. All right. So 1, 2, 3. This first 5 categories got the most days, 261 days, like for like. We go here. Now we've got a 23% advantage. We had a 26%, 26 and a half. Now we got a 23 after having two funds that only won by 3%. Now they're winning big in Coinbase. But are you winning when you're losing? You're in Roundhill, you've lost 8%. You haven't made anything. Yeah, they paid you $4.76 over the last 8.5 months. Look at this stock. It's $5.44. Remember when it was 20? Remember when it was the third best stock to return all your money? Just a reminder, here's you guys that this is a load of crap. Okay, let me tell you what the thought is. Oh, look at it, I'm in house money. I paid $20 for it. I never reinvested, right? I'm just writing it for free. You're not writing crap for free. At one point, you had a $20 stock and you got all your money back. Then it's like a play. Here's the first act and the second act. What was your first act? You bought something at $20 and 13, I forget the amount of months, 13 to 18 months, you got all your money back and the stock's still around 18 to 20. But guess what you decided to do? You said, well, I can retire on it. It's going to do the same thing. No, it's not, guys. Not by a chance. It's then gone from 20 or 18 to 5. Yeah, you got paid some money along the way, but I would ask you, why didn't you take that win and recognize it? That's a massive win. Got all your money back and all that and put it in something that then is going to go up and not go down. Now, look, nobody can, none of us know all of this. Crypto's massively volatile. I'm questioning crypto now. I'm really starting to question it. What I liked about it, and I was open-minded, was that BTC was going to go a lot higher based on being a store of wealth, a digital gold. When you're not a safety play and you're a NASDAQ and tech play, which nobody can argue that it doesn't closer parallel to that, I'm worried. Bitcoin could go down to 70 or 50 here, but it damn well better run to 200K on the next move up, or it's going to lose a lot of its audience. Okay, there's nothing wrong with volatility, but you can't stay in that winner too long. This wasn't much of a rise to a new high. I'll be honest with you. Just saying, peoples, just lifting that thought. Palantir, the biggest percentage winner and the winner of these 261 days. Look at this. Outpaid 10% on the distribution. It lost, but when you go 74.30 minus 8, that's still the best in the group performance. This is, yeah, you got a 20% gain, you Pulte holders. I was a Pulte holder for a long time. Guess what? Guess what drove me out? My loyal people. I just did a consultation with one of my long-term YouTube people on Patreon, and she said, "Oh yeah, I remember. Oh yeah, I recognize your voice right away when I spoke. Right? I listened to you for a year and a half. I remember when you were mad at Jay and mad at Yieldmax about Pulte not paying what it should have paid. Absolutely, guys. So I went where my money's treated better. And look at this. Who wouldn't? You're foolish if you're over here. You're a damn fool. Okay? Let's call it what it is. That's not the best way. You may listen to some, fanboy over there that's going back and eating steak with Jay and going on Wall Street, right? And they're going, you go, buddy. You're great. You really know the market. You really understand Yieldmax. Let me give you the fund manager, Misty Pulte Coney. You do all this. We love you. Of course they love you. You're bringing all that. You're an enhancer. You're bringing all that in. Guys, I'm not after 30 and 50 and 100,000 YouTube subscribers. I'm after helping people. I feel for people. These I'll call them assholes. Some of them are assholes. When you enrich yourself at the benefit. Now, if you see it differently and you think they're helping you in some way, hey, I understand. Everybody's entitled to their own opinion. I just think a lot of them are foolish and dangerous and don't know the markets and don't have 40 to 45 years experience, you know, and are just telling you, look at what they're buying and selling. Have them show you how much they're actually making. Okay, guys? I could go in, but it seemed like bragging. I had one guy say to me, "Oh yeah, you're living in Asia. How could you have millions?" Guy doesn't know anything. I was in the U.S. and built real wealth in that 2010 by playing the commodity super cycle. I 8x some portions of my portfolio 12x. I built wealth by studying something and working it religiously while I was working, and I had a lot of capital to add into that. So it just blew up, guys. And that's what we're looking at, another commodity super cycle. All right, 5 straight wins for Roundhill. Love it. Amazon, another stock, had great earnings. It's moving up. 14-point advantage. Okay. This one is a 3-point. Berkshire Hathaway. I'm not going to read every single thing here for you guys. You're smart enough. The text is, the color contrast and the size of the screen. You guys can pick out the stuff. So a winner, nonetheless, small margin, but a winner. That's 1, 2, 3, 4, 5, 6, 7 now, right? We had 5 straight wins. We've got 7. Hooey. How about more than double? A double would have been 160%, 158.5 to be exact, but who's counting? 2.5 times the performance. 31% or 30% higher yield. They both have around the same. But look at this. This is massive, guys. You can't ignore this stuff. Now, you can come down to Meta and say they're both losers. Do I even want to be in Meta? Well, maybe Meta has another run. Right now, Mark Zuckerberg was talking about, preparing for the metaverse. That was 18 months ago, and he talked all about that. Okay. Then he said, hey, I'm buying NVIDIA's I almost said BlackRock. They're Blackwell chips, right? I'm buying all the latest, fastest stuff. We're deploying AI. That's the future. A lot of it logically, it made sense, but it's getting overvalued. So he spent billions on Facebook. Well, Facebook hasn't been performing. Is it because he spent all those billions? I don't know. I'm not looking at I'm not doing a forensic accounting on them like I've done on some of these funds. That's why I was so angry at Jay and his team and not paying out what they should have paid out on Pulte. And it cost him a customer. The best thing I ever did was go to Roundhill. Be damn honest with you. Once I started getting weekly pay, I was like, oh, I don't have to have weekly pay. I'm not running out to get 2 times of biweekly pay. But boy, was that beneficial. If I don't like where the fund's turning, I can get out and still I can get 3 payments instead of waiting a month to, expecting $7 and getting 250. It's BS, guys. They earned it. Pay it. So, you get in some of these situations. Look at this. This is a win. Yieldmax for the win. Give credit where credit's due. Not only a small win, that's an almost 17-point win, right? From minus 10.5 to up 6. 17, 16.5 points going on 17. Good job. But guess what? Does it really matter? Not really. Nobody should be in this fund. This used to be a winning fund. Guess what? Over 142 days, it sure in the hell isn't. Well, it is for Yieldmax, but that isn't much to write home about. You can do that in a treasury bill almost, guys. All right. Let's go into our third category. These are 106 days. Now, the big winner here, there are 2 of them. The big winner is GOOW from Roundhill and AMDW. Massive. 200%. Second place performer, 248%. Okay. Really trailing. This is less than half. This is a little more than half. This is like 55, 60%. This is like 48%. Just not getting it done. This one doesn't have a counterpart. right? These are enough days. This isn't insured you that it's always going to be this way, but it is 3 months plus calendar days. 3.5 months. Okay. So big wins. Now, I'll say something to you guys that I think AMD has just been phenomenal, but so have the semiconductors. And guess what? I just did some technical analysis. I'm sharing it with Patreon. I'm sharing it with you guys now. So go look at a chart of SMH. Go back 4 years. Look from 2021 to current. Do a 5 year. And there are 3 times that the SMH, which is all your semiconductors, Intel, Micron, NVIDIA, Broadcom, AVGO, AMD. I could go on and on. There's probably just do a top 10 holding. Okay. You're going to see some names that you don't have income funds on, but they're big chip companies. Okay. That index is stretched. Those 3 times in 2021, it went to 102%, exactly above the 200-day moving average. Okay. Then in 2024, it did the same thing. It just did that last week. Guess what happened after the 2 previous stretches where it ran to 102% of its 200-day moving average? What did it do? It pulled back 40%. One of them took 60 days only to retrace that. The other one took 4 months. Okay. It's not straight down. The one that was 2 months was more of an elevator down. The one that took 4 months went down maybe 20%, bounced up 10, went down 20, bounced up 10, went down another 10 or something, so that it ended up at its low point at 40%. And people say, oh, yeah, that's never. And remember, we're already down about 5%. I just put my short on yesterday. And I used a triple ETF. Send me an email if you want to know what I bought. Okay. About a triple short on that. Could I be wrong, guys? Of course. It's because it happened twice doesn't mean it happens a third time. But you know what? The probabilities are pretty much there. The market feels toppy to me. In each of those last times, it was toppy. Whether the whole market goes down or whether the semis lead going down, because they kind of led going up. So again, do I like AMD? Do I like that company? Yes, I do. So I'm not trying to short them. Probably could have bought a 2X, but when I saw a triple SOX semiconductor short, I grabbed it. All right, guys. Let's do the final. What's interesting is we got 9, then we got 9 to 2, then 10, 11, 12, 13 to 2. And then we come down here and look at these. We have 1, 2, 3 of these. 1, 2, 3, 4. So 3 of these 5, what they did was they released 4 more funds here. So only one of the 4 had a matching pair. And it's a small amount of time in the market. But hey, Yieldmax won the 8-day. Their GDXY beat GDXW. Now, do I believe that's going to continue? Hell no. Because I'm bullish as hell on GDX. Okay. We're at $72. I think we could still go to sub 65. I think it's vulnerable to 63 or 65 before the market correction in gold and silver and the miners. We're bouncing back up now. We're showing strength, but I think there's still more downside to come. I own some GDXW, okay? But I think you'll be able to buy it maybe 45, maybe 44 in the future. Again, could I be wrong? Do we just take off? Anytime you're in a commodity super cycle, you're vulnerable to the upside more than the downside. But I think we ran so hard and so far on gold and silver over 6, 8 months. Those stocks were up 100% plus. Naturally, they're going to pull back 25, 30%. They want to shake out the longs. Most people don't have the fortitude or the guts to hold on when things turn against them. They believe that they're just going to lose everything they gain. And then when it turns, and we're into the next run. All right, guys. So I don't have any comparison. So I end up with 13 to 3 with 4 companies not participating.
This final one is physical gold, GLW. I like it, but the miners have leverage. Let me give you a quick example, guys. This is the kind of stuff I talk about in my Patreon all the time. Okay. So somebody will say to me, well, Bruce, do you think that GDXW is going to outperform GLDW? Look at gold. It's really risen a lot. I said, absolutely, I do. It has a geometric leverage play to the underlying metal price. Okay. So let's say gold is 4,000 and I think it's going to 15,000. That's a 3 something X. Take a big gold producer. To me, it's minimum of a 5X. So it's got leverage. And I'll walk you through an example. So if you're a big producer and you pull gold out of the ground and you can sell it for 4,000, they didn't last quarter because the average prices back in that quarter were around 34 to 35. The average for this fourth quarter are more going to be like 38 to 39. But my point is, let's say you sell gold at 4,000. Okay. So we got a $4,000 gold price. What's our cost? They call it all-in sustaining cost, 2,000. Therefore, our profit is 2,000. Now, what happens when the gold price climbs to 5,000? Okay. You still have a $2,000 cost. Maybe if it's a year later, it's 3 or 4%, 5% inflation on fuel, right? Now what do you have? You have a $3,000 profit per ounce. Okay. How much did your profit go up? It went from 2,000 an ounce to 3,000. What is that? That's a 50% gain. What did the gold price go up? 25%. Guys, I could do this in my sleep. So that's called leverage. So this will be a great performer. If gold goes to 15 in 5 years, like I think it will, then you're going to do okay in this fund. But you're not going to do as well as you're going to do with gold miners, because when they run, they're going to go up 6 stair steps. They're going to pull back 2 or 3. They're going to go up 6. They're going to pull back 2 or 3. You're going to have higher highs and higher lows, guys. That's what you want. If I put you in NVIDIA 6 years ago, okay, they didn't have an income fund. But boy, if you bought an NVIDIA income fund 6 years ago, can you imagine where you'd be? But you have to know what you're in and you have to know where the capital and the sector rotation is going. Guys, and the only thing you can do is study history and study the markets. I played the last super cycle to retirement. These YouTubers out there promoting Yieldmax have no idea. Not saying there's not 1 or 2 good ones, but those ones that are telling you Alti and Misty and all that nonsense and going back to Wall Street with the Yieldmax gang, and I call them fanboys. They don't know crap. All they know is they get their steak dinner and feel good, and get their in their mom's basement or whatever, and get their YouTube likes and comments and but you know what? That's all. There's a lot of people turning against Yieldmax. It was overhyped, guys. And when the management's not telling you the truth, that's bad enough. A YouTuber, I just say they don't have an experience in the market. How many bear markets have they been through? Right. You don't know what these things are going to be. Nothing. When things go down, they really go down. Remember that. Any fund, you can have 95, you can have 100% downturn. Yieldmax is good for 90 to 95%. You can't possibly pay that much. Okay. So I don't know what the markets are going to do, but I do know what's going to outperform. I know where the money flow is and where I want to be for the next 6 years. So be careful out there, guys. That's all I tell you. Come over to Patreon. I don't promote nonsense. I don't give you, oh, go buy this cybersecurity, go buy this dating website, go buy this. I'm not promoting t-shirts and products. It's just a bunch of crap. I'm not even interviewing anymore. Do you know how many interviews I've turned down with the Roundhills and the Granites again? I've interviewed most everybody. Nobody from Yieldmax wanted to interview me because I told the truth. But other than them, I've interviewed almost all the CEOs of the fund company. But I'm not desirous of that anymore. I want to help people I want to teach courses. I'm teaching options. I'm teaching a couple people a week, okay? They really want to learn options. No courses, no go watch this video. I interact with them, okay? I teach them. We walk through examples, guys. So that's over there. The other thing is I do consultations. Yeah, I have three tiers, a $5, $10, and a $50. The $50, you get the same content that the $10. 10 gets you all of my content. If you're in the $5 a month, you get about half the content. You get the general stuff. But when I do my individual, these 25 stocks are 10 baggers, I'm not going to put that out there for $5 a month. Okay. It's going to go to my 10 and my 50. But the 50 also get a 45-minute call. That call, on average, my first call has been an hour and a half. I don't charge anymore. So it's a $40 fee to have my time to talk about it. And a lot of time I add value. Go talk to the people. Go join the community and free and look at the comments over there, guys. Same stuff. I was putting out metals and miners in my playlist in YouTube, okay, in May. It's the only playlist I ever did. It didn't get any views. But I was frustrated. I swore I was never going to do any more metals videos. You know what it led me to do? Go start Patreon. I was shocked. I got 50, 80 people right away that went over that were buying those things. I had no idea. They're not commenting. They're not telling me over in the channel. The views are so low, I thought it's a waste of my time. So now I do that exclusive. I counsel people. I help people. I have just high yield people, right? So I tell them about what funds to be in here. Okay. I still think there's a few AI worth owning. Okay. And I also like when somebody can trade a little bit. You know, I traded my Pulte, sold out in the 90s and bought back in the 70s. It was a great trade. I took $20 out of it. That's what you have to do. Like AMD. AMD will have another day. I don't believe it's now. I think it's topped. So be careful out there, guys. It's the kind of stuff I can help you with. You can be in my $10 tier. You don't have to join the $50 tier. Send me an email to the Bruce2500 at Gmail, all one word, and just say, can I get a consultation with you? $50 is probably going to be 100 or 150 before long because I'm getting a lot of people. I simply can't do it. And it's also taking time from my trading. But I do enjoy it and I do love it. That's why people are shocked. They say, "Oh yeah, we'll go 45 minutes." Well, we spend 30 minutes talking about ourselves, getting to know. These are my goals. This is what I did. This is what I've experienced in the market. This is what I learned. This is what I'm afraid of. I don't know. I don't mind doing that. I can't always do it. It's going to go back to a 45-minute, maybe an hour. But I'm willing to give when I can, guys. It's not about greed on my part, like a lot of these YouTubers. Okay. I want to give back. It's just a way I do it. All I know is to give in my expertise and in time. All right, guys, that's enough of that. I've gone on and on about that. And I tell the same story sometimes, but new people always pop in. And someone might ask me, why are you even doing YouTube? Because guess what? It does feed my Patreon, guys. People do watch this stuff and say, wow, this guy really understands these income funds. He understands something about the markets. It's not just the results. Anybody can put a spreadsheet together. And no, people ask me all the time, I'm not going to give you my expertise in the spreadsheet. Okay. I will give you the expertise in how I get to the numbers and all that. But it's a lot of work to build these things. And so I do a lot more. I have a database of 825 going on 830 gold and silver miners. I analyze, I look at 1 day returns, 1 week returns, 1 month returns, 3 months returns, 6 months returns. I find when things are shifting, when the money flow is going into a smaller developer, I'm like, what's going on? Then I go look at their drill result and then I vet them. And then I look once in a while, I'll find another analyst that's done a YouTube interview of the CEO. So I'm constantly building my expertise in that sector because that capital rotation, this will be my last hurrah, guys. I'll probably do an annuity beyond that. I will have so much that I don't need to do anything. I don't need to do it today. I don't need my YouTube. I don't need my Patreon. I live in Asia. I have a very low cost of, I'm stress free in that. The markets can be stressful. Anybody that tells you they aren't, when I was doing futures in the commodity super cycle and working full time, literally, I was having $300,000 swings in a day. Think about that, guys. Now, my portfolio was 8 times that. But so what? When you're doing 1/8 of a swing in your portfolio, up sometimes, down sometimes. You want to talk about leverage? Look at futures. You go buy gold and silver. Oh my God, don't get me started on silver futures. You start owning 10 contracts of silver and it goes from $11 to $27. You're making so much money you can't believe it. And then if you're not out and it's back at 23 and you watch it go to 9 like it did in 2008 to 2009, oh, so I no longer do futures on that. 3x is like nothing to me on an inverse fund or a bullish fund. There's GDXU, right? So in GDX, if you really want leverage when it turns, you buy Nugget in UGT. When you want triple leverage, there's a GDXU, and those all have bearish counterparts. It's just the bear cycles don't retrace anywhere near what the upside is on the bull run. So a lot of times I tell my people, just a final thing, final thought. When you own commodity super cycle, I say, listen, get right, set tight. You do not have to trade these positions. If you get 100% upside and a 28% downside and the next 100%, do you really care? It's like NVIDIA. If you bought it at $30 and its equivalent after all the splits is like 2,000, do you care that it went to 50, pull back to 30, went to 80, pull back to 60? You really don't. So I tell them, you can try in time, have a core position that you don't put stops on and you don't trade. And then maybe you have 20, 25% would be a max allocation of those shares that you call tradable, right? That's your non-core. Same company, it's just your non-core. You do not want to get out. The stock market loves in bull runs to shake you out. All right, guys, this is Bruce with targeted wealth creation. I almost said targeted Patreon creation. Targeted wealth creation. Guys, this is not financial advice. I'm not a financial advisor. Bye for now.